Well, this is the most requested video suggestion I received lately, and there's no way back but for me to make it and show it to you guys. Today I will review one of the best premium paid indicators on a TradingView platform and see whether it's profitable or not. I will walk you through the indicator and how the strategy works, so get some popcorn ready and let's begin the video. So this creator claims that this indicator works on all the time frames and different assets, but for this video I will show you a forex trading strategy based on a 5-minute time frame. So let's open up a TradingView platform and add this indicator to our chart. So I will click on the indicator section and I will start typing glow node, and I will be using this one over here. As you can also see, this creator has a few other indicators that are free of charge to try, so if you want, give this a go. Now, the most interesting and exciting feature of this indicator is that it comes preloaded with strategies within itself. You have the option of choosing between support and resistance, cloud rejection, which is basically based on the concept of the Ichimoku cloud, or EMA cross, which allows you to trade using exponential moving averages if that is your preferred method of trading. But for this video, I will show you a strategy that is super simplistic and beginner friendly using the EMA cross. So for the EMA settings, we are going to use 20, 50 and 200 as a baseline for the strategy. And once we are done adjusting the settings, this is how it looks on the chart. We can see that all three exponential moving averages are looking nice on the chart, as well as the buy and sell labels provided by this indicator. I do have to mention one important thing when it comes to these type of indicators. I have tested many strategies and many indicators on my YouTube channel that provides you a buy and sell alerts. But the problem with them is once you have a sell or buy label appearing on the chart and you're ready to enter the trade, the signal is gone.
No! God, please, no! No!
However, with the glow node indicator, they put in the signal onto the next candle, which means that you would only enter a trade onto the next opening candlestick, which allows you to avoid any misleading entry opportunities. So we are set to go with our strategy, but as always, there are a set of rules you must follow before considering any trade entry. We will look to enter a long position if 200 EMA is trending below the price, the EMA 20 has crossed above the EMA 50, and the glow node indicator has issued us a buy label. Only then we will wait for the next candle to open to enter the trade. The risk to reward ratio may vary depending on your risk management rules, but I would aim for 1:1 or 1:1.5 risk to reward ratio along with the price action analysis. So in this example, I would enter over here, setting my stop loss below the 20 and 50 exponential moving averages and setting my profit target around this level, because we can see there is some sort of resistance around the zone, as you might expect a pullback from here. And for the short trades, we will use the exact opposite rules, so we will only enter a trade if we have a clear indication that the 200 EMA is trending above the candlesticks, the 20 and 50 exponential moving averages are crossing each other, and the indicator produces a sell label. Then we only enter at the next opening candlestick, setting a protective stop loss just above the 20 and 50 exponential moving averages, which allows the trade some room to move, and setting a profit target at around 1:1 risk to reward ratio because of a potential bounce of this support zone. So let's actually observe buy and sell examples on the live chart. This is a 5-minute time frame on the Euro USD currency pair. We can see that there's a clear trend towards an upside, not even on a 5-minute time frame, but let's open a 50-minute time frame, which is also trending towards an upside. So now if we take a look at the exponential moving averages, 200 is trending below the candlesticks, which is the first green light for us. And now we also see that 20 and 50 exponential moving averages crossing each other, suggesting buying power for the euro, and buy label appears. So now we would only enter on the opening of this candlestick, setting a stop loss below these EMAs and targeting profit around this zone. And you're probably wondering why. Because if we take a look at the 15-minute time frame, we can see this previous high zone over here, meaning that the price could potentially retest the zone before it either turns around or continues to move towards an upside. So let's play a replay tool and see what happened to the trade, and as we can see, the price broke past the previous high level, hitting our target zone, reaching around 40 pips in total profit at the moment. So now back on the charts, let's take a look at this potential sell entry example. We are seeing a nice trend towards the downside. The 200 exponential moving average is well above the candlesticks, and the 20 and 50 EMAs has recently crossed each other, giving us a nice bearish engulfing candlestick closure, closing below both EMAs. So it looks like we have all three indications confirming a solid entry opportunity. Now, as I say, patience is a key, so we would wait for the next candlestick to open to enter the trade, setting our stop loss just above the previous high and both EMAs, and our take profit just around this support zone, because as we can see, the price previously respected this support multiple times, so we have to be careful and mindful about that. So let's play a replay tool quickly, and as we can see, the price dipped down nicely, and as I said about this support zone, it did respect it again, giving a nice push before it continued to move towards the downside. Of course, it's optional, but I do highly suggest the beginner traders to move your stop loss to entry, because as you can see, even if this scenario, if you moved your stop loss, we wouldn't be stopped out but carry on making profit. And as a cherry on top, I did have to backtest this glow node EMA cross strategy with my favorite backtesting software, Trader Edge. So I was backtesting this strategy with 200 trades on a small $500 account using 1-to-1 risk to reward ratio. Of course, the start is always the slowest one since the capital is small and you can't risk a lot, but the overall win rate came out pretty nice, which is nearly 53% with a closing balance of $4,507. So a lot of you commented in my last video how long it will take to do this strategy, how long it take to do this one and that one. So this one, it actually took 9.5 months to grow. So since the balance is smaller, you can't risk a lot as I mentioned, but once it gets bigger, you can slightly risk a little bit more to profit. And as always, if you like my stuff, hit a like for a cookie, and if you want to see me how they scammed me with a 100% win rate strategy, make sure to watch this video next.